Well, then it is 1 o'clock. We should probably get started. My name is Bill Giffen. I'm with TC Wealth Partners and the Trust Company. I want to thank everybody for taking the time and joining us today. Periodically, we obviously would love to share information that you might find interesting and helpful along your path with investing and with our advisors. Today on the phone, I'm going to turn it over to Nancy Bell and Kevin Rice. Nancy Bell is a senior wealth advisor with our organization, and Kevin Rice is our senior investment strategist. Both of them have been working very closely with Kelly, and we're grateful to have her here today. And so with that, I will turn it over to Nancy.
Nancy, you're muted.
Okay, let's try that again. Thank you all so much for being here today. We do have a great presentation for you. Our guest speaker is Kelly Baldoni from Impacts Asset Management. She is Vice President of Global Women's Strategies and oversees the sales and marketing for the firm's Gender Lens strategies. What I think makes Kelly the best person to talk about an investment strategy that's focused on women in key leadership roles in some of our largest publicly traded companies in the world is the fact that about 7 years ago, it was Kelly's vision and hard work that pioneered this strategy for Impacts. So she's been involved from the very beginning and has got some great insights to share with us. We're going to learn about why this is such an important investment approach, how to choose companies that go into the portfolio, what kind of impact they hope to make by investing in companies that fit this profile. And we're going to learn all this in about 30 minutes. So at the end, we'll have time for you to ask questions. You're also welcome to put some questions in the, I think on the right side of your screen, you have an option to put some questions in the question and chat boxes. We'll cover those as well. With that, I'm going to turn it over to Kelly.
Great. Thank you, Nancy. I'm thrilled to be here today and speaking with you all. So let me try to share my screen and we can get started with some slides. Oh, hold on 1 second. Here we go. Can you guys see that?
Yep.
Okay, perfect. So Nancy, I think you might have been giving me a little bit more credit than is due here. You know, my firm is definitely pioneers, and I've been one of them alongside a great team of Gender Lens investors. And I thought we'd just begin with a little bit of a background on what it means to invest in women, which is referred to today as Gender Lens investing. And I was not familiar with that term, frankly, before I got into the space. And the simple definition of Gender Lens investing is really just how you're viewing your portfolio or how you're investing your money, and does it intentionally benefit the lives of women and girls. So that can mean investing in women-led companies. It can mean investing in a startup that was founded by a woman, or investing in a company that makes products or provides services that benefit women. And you know, this can be part of a overall impact or sustainable investing strategy, or it could just be a small part of your portfolio. So it looks different for everybody, but we like to say all investing makes an impact. So just kind of thinking about what you want your impact to be makes sense. So our firm has been in this space for well over a decade. We're considered to be the leader in our industry. We have a ton of expertise in the space. We started offering a specific Gender Lens strategy back in 2007. And the PAX Ellevate fund, which is our current Gender Lens strategy, that was launched in 2014. And that fund is comprised of the highest rated companies in the world for advancing women into leadership positions. So I'm the product specialist on that fund, as Nancy mentioned, and it's been quite a journey to watch it grow. You know, as I mentioned, Gender Lens investing wasn't a term when I started. There was not a lot of assets and strategies like this, not a lot of options to invest in. And if you fast forward to today, it's one of our fastest growing funds, and it's one of the largest themes within the space of impact and sustainable investing, probably right behind climate change. So it's been great to watch it grow. We are about to hit $1 billion in assets in our fund, which is very exciting. I never thought that we'd see the day. And there's now over 35 public equity gender lens investment options. So we are not the only option anymore, which is very validating to the investment thesis, which we'll talk about today. So I think, you know, if we want to get started with just kind of what's the landscape of women at work, you know, that'll help us think about like what our investment opportunity is to invest in these companies that have gender leadership as a main criteria. So sadly, we are still at a pretty big gap in terms of representation for women in leadership in the corporate space. So this is a stat that's kind of looking at 3,000 global firms. And what it's showing is that 20% of those 3,000 firms, 20% of their board seats are held by women. Only 17% of their executive management positions are held by women. And just 4% of women are sitting in the C-suite, specifically in the CEO position. So although it's 2021 and we think that there's been a lot of progress and we're getting closer to parity, which there has been progress, you know, we're still pretty far away in terms of seeing the kind of representation that we would want to see. And when we look at kind of where are the women, right? So why is this happening? I always say that I don't think there's many firms or companies out there that, you know, have the management saying, let's keep all the women out. You know, that's not usually happening. What we hear is that there's a pipeline issue. There's not a ton of women candidates when you get to the top. So kind of why is that? And I like this visual because it shows that men and women are actually entering the workforce at pretty much the same rate. But it's as you're getting closer, so women are the light blue and the men are the dark blue in this chart. As you get closer to the middle, which would be the C-suite, you know, the men are just taking up higher percentages. And it really first starts at this manager level. So men are getting promoted to manager very early on at a much higher rate than women are. And as that's compounded from manager to senior manager to vice president, you know, by the time you're selecting somebody for a C-level position, you know, 74% of the pool you're choosing from is men. So if you're going with the assumption that the best candidate gets the job, you know, there's a great chance that of, you know, 74% of the candidate pool, that person will be chosen from that group, and that would be a man. So McKinsey does a ton of interesting work in this area. If you're interested, they publish a study that's called Women in the Workplace, like every year and a half, and they just published a new one. And they talk about this term, the broken first rung. So exactly what I just kind of went over, that first rung of promotion to manager, and why that is really the crux of the issue of not having more women rising through the ranks and available to select from for the C-level positions and board levels and et cetera. So what they're quoting is that for every 100 men that are promoted to manager, just 72 women are promoted, and that's just that first level, and only 58 Black women are promoted. So, you know, that compounds over time, and it's a pretty big gap the higher you get in the organization. And if men and women, if we were to erase this and have men and women promoted to manager at the same rates, we would actually add 1 million women to management in the next 5 years. So this would be obviously a huge change and tighten that gap significantly if we were able to do so. I just think this is kind of an interesting anecdote that is also comes from research, but when you talk about the barriers of why women are not getting promoted, men and women have different responses. So men responded that the top barriers to women getting promoted within an organization is conflicts with raising a family, and that there's a shortage of female candidates. While women responded to the same question, and said an unsupportive culture and an organizational bias were the big barriers, for them continuing to rise through the ranks. So if men are in the management position, deciding who's getting promoted, that's a pretty interesting perspective to consider. My last piece of bad news, and then we're going to talk about solutions, is at the current rate of progress, which is very slow, it's going to take 100 years until we start to get closer to parity at that 50-50 level of representation. So there's a lot of work to be done. And one way that we can change this and move the needle is through our investments. So shifting gears a little bit to why this is an investment strategy, right? Because, I think there's a moral kind of imperative to achieving gender equality, but there's also an economic one, and that's sort of what we're here to talk about today. And the benefits of having women in leadership are very clear from an investment standpoint. There is a ton of published research on this topic that links having more women in leadership positions with superior business results, both on a quantitative and a qualitative basis. We'll see higher returns on equity, lower volatility of these companies, greater long-term focus, greater client focus, and there's tens of dozens of studies that really point to similar conclusions and have a ton of consistency. I'll, just in the interest of time, mention one or two here. The infographic on the left is from MSCI, a study that they conducted that looked at 500 US companies, and those with 3 or more women on their board experienced gains in return on equity of 10% and earnings per share of 37%, while those with no female directors experienced changes of -1% in return on equity and -8% in earnings per share over the same time period, which was looking at 5 years. So very significant in that companies experienced better results with diverse leadership teams, and those that did not have it actually experienced negative results. And then the last slide I'll point to, statistics-wise, on just kind of why this makes sense from a business standpoint and an investor standpoint, and then I'll hand it back to you, Nancy, is kind of reiterating the similar point, but it's looking over a longer time period. So this is a great chart because it's over 13 years, and it's looking at 3,000 global companies. And the top line in the chart reflects the share price performance of companies that have women on their board versus companies with no women on their board, which is the darker blue line on the bottom. So you can see the drastic difference that's consistent and over a long time period. So this just kind of really summarizes the investment case, the business case, why there's an opportunity for us as investors, because there's so many companies that still don't have great representation of women in leadership. The ones that do, that's the investment opportunity that we see, that we want to invest in, create a fund of those kind of companies with the goal of delivering greater performance over the long term.
So Kelly, yeah, how do you do that? How do you take this great, these learnings, these insights, and really that make a difference from a numbers perspective? How did you take that and turn that into a portfolio? How do you do that?
Yeah, so that was kind of our challenge, right, as investors, to identify companies that have greater levels of women in leadership as our competitive advantage. So we have a gender analytics team. They're part of our research team. I don't know of other companies that have a gender analytics team, but ours has about 5 individuals on it that gather gender-related data on 1,600 global companies. So we're starting with the universe of companies in the MSCI world, and that's mostly large cap names that we've heard of. And what our analysts are doing is they are creating a proprietary gender score to identify those highest rated companies. So what we're looking at is who's on their board of directors, what % are women, who's in the executive suite, the C-suite, and the senior level managers. those two are actually equally as important to us, because I think we all know that you can have the tokenism go on, like the token woman on the board, but we're looking to make sure the company really values diverse leadership teams, and that it's not just at the board, but also in management. And then we look to see what kind of proactive policies a company will have in place to promote some accountability and transparency. So we look to see if a company has any efforts in place to recruit, retain, and develop their women employees, if they're disclosing gender pay equity information, if they're being proactive around setting gender-related goals and targets. There's some very public commitments from companies like Accenture. I'm in Philly, and that's a company that's based near me. You know, they say by 2025, 50% of our managers are going to be women, and that's like on their website, you know. So we like to see goals and targets publicly, you know, stated. And then we look to see if they, a company releases employee demographic data. So if they're sharing what the composition of their workforce looks like. So really transparency, you know, are they being clear about what they're doing and working towards, because no company's perfect. No company that we own has parity. We wouldn't have anything in our portfolio if we did, but we want to see companies taking steps to get better. So we create these kind of gender-related factors, and then we assess these 1,600 companies on these factors and essentially rank them 1 to 1,600 on their gender score, and then we invest in the top 25%. So the top 25% that score the highest, those are the constituents and our holdings in the PAX Ellevate fund.
So, and you have a process really, I would presume, for checking and rechecking, right? So looks good today. How does it look 6 months from now, or, you know, a year from now?
Exactly. You know, it takes several months to collect this kind of data. It's not widely available. So that's definitely a competitive advantage of ours, that we have a team that's collecting this kind of proprietary information and conducting this this score. That's done, so several months of collecting the data, and then we score and rank the companies and select the ones that we're going to own once a year. So that whole process is done once a year, because there's not a ton of turnover, as you could imagine, in those top level positions, but we do want to make sure that we're owning the highest rated year over year. So sometimes of the 400 companies that we own, you know, 30 or 40 could drop out, 30 new companies could come in the next year. So we're trying to keep raising the bar.
So what was surprising to me when I was looking at your top 20 holdings and then doing comparisons to other investments with large cap companies in it, global companies, was to notice that there was a lot of similar names, right? There's your top 10 even has a lot of, there's a lot of overlap between other large cap company portfolios. Can you explain how, let's say, a couple of those are, how they're in your portfolio? Because some of us might think otherwise, that, you know, we didn't realize that those companies might be kind of forward thinking in the importance of women in leadership.
Yeah, I mean, when I first heard about this strategy, I was like, what companies are these? Like, I'm picturing like a pink logo or something, like gender leadership companies, you know, like truly I was. And then I look at the holdings, and you would, if I showed you guys the whole list of 400 names right now, nobody would say, oh, that's clearly a gender leadership company, because the names that we're owning, you know, are Microsoft, PayPal, Starbucks, Estee Lauder, American Water Works, you know, these big blue chip names that are not known, you know, for having better diversity than somebody else, but they're just good companies, right, that a lot of people own. So I can tell you, you know, PayPal, for example, that's one that everybody knows. 36% of their board of directors are women. 30% of their executive team are women. They also have better diversity across all fronts, racial and ethnic groups as well. 45% of their board of directors and 50% of their executive management team are diverse. They have great kind of workplace equality practices too. They do a lot on hiring initiatives. So thinking about, you know, a very fair hiring process, taking bias out of that. There's some best practices that we actually take what PayPal is doing and tell other companies to implement in that area. And then they've had an awesome response to COVID. So we've actually seen some really interesting companies that we own be more resilient, have better performance throughout the pandemic, post, as we're still in it. But since it started, there's been this great link between diverse leadership teams and more resilient companies, just kind of managing it better. So PayPal is one example, that they are trying to create flexibility in the kind of work environment to not lose their talent. They want to retain their talent, through the pandemic. And so they've transitioned, I think, 100% of their workforce to remote working at this point, or flexible arrangements. So it's not certain jobs, it's 100%. And they're continuing to pay employees that are unable to work because they've been impacted in one way or another because of COVID. So I just think they're really a forward-thinking company, one you might not associate with a gender leadership name, but they are.
So I think one of the last things as we, sort of begin to wrap this up is, of course, the impact that not just this theme, but other themes that are out there for investors to take a look at. And what is the impact that we hope to have, you hope to have, and as an investor, what kind of impact can we expect when we focus on strategies like this that are, well managed and conscientious and using good data? What kind of impact, even as investors, can we hope to be making?
Yeah, I think that there's a couple ways to have impact with this style of investing. Where you're directing your capital, kind of where I started, all investing makes an impact. You're giving them money, you're supporting them. It's like how you vote, right? So where you direct your capital can have an impact. And for us, if you're directing your capital to a fund, that has a mission like this PAX Ellevate fund that I was talking about earlier, you're investing in companies that say, hey, we value the role of women in leadership here. We think it's a smart business strategy. We've shattered the glass ceiling. Kind of, we get it. And you're directing your capital away from companies that do not do that. So one of our clients is like, I think about it as investing in the kind of companies I want my daughter to work at, which I thought was like a really cool kind of way to look at it. And then the other, way that we deliver impact as a firm to our investors and our clients is through being very active shareholders of these companies. So shareholder engagement, which means, voting a shareholder proxy, just kind of being active in the governance of that company and using your right as a shareholder to make changes. We take that very seriously, and it's a really important way to move the needle on various issues. So the gender-related issues that we take up at companies that we own are on improving diversity on the board, not just gender, but racial and ethnic diversity as well. And then also asking companies to disclose on their pay equity ratios. We've traditionally gone after the kind of tech industry and the financial industry first, and some of the behemoths. Like, we've talked to Apple, Amazon, Salesforce, and we've had success, us alongside other institutional investors, saying, we're owners of your company and we want to see that you're paying people equally. Maybe you are, we don't know. Can you show us the results of an independent pay equity assessment? And all three of those companies I mentioned did do that after active dialogue with us. So those are the kind of stories that we get to deliver back to our investors, because we can only do that when people trust us with their money and their investments. It's the kind of work that we get to do on the side that makes a big difference.
Yeah, I think that accountability is key. Before really ESG took such a spotlight, a lot of advocacy was going on, but it was kind of considered fringe. I think it wasn't considered very important to the corporate governance practices of each business. It just wasn't. And now there's such a light has been shown on that to say, hey, this is really important. And large firms with, for lack of a better word, large investment companies with buying power can in fact can change those practices for the better. And so I think that's happening, you know, as you said, more and more and more. And I think as an investor, as an individual investor, if this is something, if this theme resonates with us or other themes resonate with us, the fact that we do put our savings and our investment dollars towards those things is a way for us to feel that connection too, right? That we're also helping to change things for the better. So I was gonna say, is there anything else you want to add, Kelly, before we ask a couple, see if there's any questions out there?
I'm happy to take questions, whether it's on, you know, kind of the investment case for this kind of a strategy or on the Pax Ellevate fund itself, or happy to provide some more examples. But yeah, if there's questions, we can get into those. I know we are running up on time.
Are we able to open the microphones? I'm not sure about that.
Yeah, there should be a question box to submit.
We did already have a good question regarding how you're voting your proxy. So I think we covered that and how you're able to influence behavior. So that was a real good question that was in there. I'm going to give it a second.
And we vote 100% of our proxies too. I mean, it's a huge 100%. Yeah, it's a huge part of our work. We have a proxy voting team. We just went through proxy voting season. It's very intensive. Yeah, so.
Oh, that's really great.
Nancy, while you're waiting, I'll ask a question. This is Bill.
Sure.
Kelly, I'm curious, based on, you know, kind of you talk about taking that top 25% as you look at the points that you all look at from a data perspective. What are some of the investment-oriented quantifiable data that you all look at as it relates to these organizations also?
So this is more of a systematic strategy, so it's not actively managed. So we're really just isolating gender as the primary factor. We don't have other inputs that go into this selection process. We do have an optimization tool that we run. So once we select those 400 companies, we have a tool that controls for various risk, you know, parameters to keep a tighter tracking error to our benchmark, which is the MSCI World. But in terms of other financial indicators that we would consider, we're actually kind of taking our hands off of it, not actively managing the portfolio and letting the gender factor kind of speak for itself.
So that top 400, is that based on those criteria and then it runs? Okay, that's good. Thank you.
Yeah, and then the weight of those holdings in our portfolio kind of depend on some of, you know, how we're optimizing the portfolio in terms of, you know, the sector allocations and regional weights and things like that.
Perfect. Thank you, Kelly.
Sure.
I'm not seeing any other questions, so you must have done, and I'm sure that you did, because an excellent job of talking about this. We're so glad that you were here today, Kelly. Thank you. We're really, really happy to have all the people who called in. I hope, you know, one of the things I wanted this to demonstrate for us is we hear the term ESG and sustainable investing, is it so much starts from a corporate governance perspective, and really who you have in the boardroom and who you have in your leadership, making those decisions on behalf of your employees and how you go out into the world as a business really does start with corporate governance. And so I think this is a really great way to help us all understand how important it is, and that there are ways that you can participate as an investor. So if that's all we have, I don't see any questions. Thank you all so much for being here today, and enjoy the rest of your day.
Thank you, Nancy. Thanks.
Take care.